Welcome to the deep dive. Today, we're really digging into the Austin housing market. It's Monday, July 7th, 2025, and things are definitely shifting.
They really are.
Our goal here is to cut through all the headlines and give you a really clear picture of what's happening on the ground. We're looking at a mid-2025 snapshot and the latest daily real estate briefing.
Yeah, lots of fresh data to work with.
And what jumps out right away is this. We're seeing historic inventory levels, prices are definitely softening, and, well, buyers seem to have a lot more leverage now.
That sums it up pretty well. It's a buyer's market taking shape.
Exactly. So let's unpack that first point, the inventory. It feels like there are for sale signs everywhere. What are the actual numbers telling us?
Oh, the numbers are pretty staggering, honestly. Right now, active residential listings are sitting at 17,747. Wow.
Yeah. And get this, that's only 329 homes shy of the all-time record high, which was 18,076, set just back on June 27th. So very recently. Okay, so we're bumping right up against record levels. How does that compare to, say, this time last year?
Good question. Last July 2024, we were at 15,503 active listings. So you can see it's not just a small increase. It's a significant, sustained jump in the number of homes available.
Right. And that raw number, that's one thing. But how does it translate into, that key metric, months of inventory? What does that look like?
Okay, so the months of inventory, or MOI, that tells us how long it would take to sell everything on the market at the current sales pace, right?
Mm-hmm.
Right now, it's at 6.32 months.
6.32.
And last year?
Yes, July.
It was 5.37 months. So that's a 17.6% increase year over year.
Okay. And what's considered like a balanced market versus a buyer's market in Austin, typically?
Well, Austin often considers that threshold for a technical buyer's market to start around 7 months of inventory.
So we're really knocking on the door.
We are very, very close. It shows just how much the pendulum has swung away from sellers.
And you see that reflected in pricing behavior, right? I saw a stat about price cuts, almost 57%.
Yeah, it's pretty dramatic. The data shows 56.9% of all active listings have had at least one price drop.
That's more than half.
Exactly. It's not just testing the waters anymore. Sellers are having to actively adjust down to meet the market.
Are there specific areas where it's even more common?
Definitely. If you look at places like Georgetown, Pflugerville, Leander, they're actually seeing over 61% of homes with price reductions.
Wow.
Even Austin proper is at 57.6%. It just signals that the days of, multiple offers way over asking, those are largely behind us for now. Sellers need to be competitive.
Okay, so tons of supply, sellers are cutting prices, but what about the buyers? Are they jumping at these opportunities? This is where it gets really interesting, I think.
It really is. Because while the supply side is booming, the demand side, well, it's telling a different story.
So tell me about the activity index. What does that show?
Right, the activity index. It basically measures how many listed homes are actually going under contract, sort of a post-check on buyer engagement. It's currently at 19.5%.
19.5? How does that compare?
Well, it's down 15.3% from last July when it was 23.1%. That's a pretty noticeable drop.
Yeah, it suggests buyers are maybe hesitant, despite all the choice.
That's exactly what it points to. Significant hesitation, even with more homes to choose from.
Which brings us to another key ratio, right? The new listing to pending ratio. How many of these new homes hitting the market are actually getting snapped up?
Yeah, this one really highlights the imbalance. The ratio is currently at 0.45.
0.45, that sounds low.
It is low. Historically, the 25-year average for Austin is 0.81.
Okay, so break that down. What does 0.45 versus 0.81 really mean?
It means that right now, for every 10 homes listed, less than 5 are going under contract. Historically, it used to be more like 8 out of 10.
Wow. Less than half are converting.
Exactly. And even looking year to date, the cumulative ratio is 0.67. So this isn't just a 1-month fluke. It's a sustained trend for 2025 so far.
And the actual number of pending sales, is that down too?
It is. In July 2025, we saw 4,307 pending listings. That's down 5.7% from July last year.
Okay.
And if you look cumulatively, January through July, pending sales were at 23,343. That's down a hefty 16.5% compared to the same period last year.
16.5%.
Yeah, and it's also 8.6% below the long-term historical average for that period.
So it really seems like affordability issues and maybe just general caution are keeping buyers on the sidelines, even with all this inventory.
That's the picture the data paints. Buyer hesitation and affordability are really dampening activity. They're just holding back.
And you mentioned this earlier, the gap between new listings and pending sales. It's widening, right?
Massively. The cumulative difference just from January to July this year is 6,918 more new listings than pending sales.
Almost 7,000 homes added to the pile, essentially.
Pretty much. And that difference is the highest it's been since 2010, when it was around 7,200.
So homes are definitely accumulating on the market. It's not just more choice, it's unsold inventory building up.
Exactly. The market is struggling to absorb all the new supply coming online.
All right, let's shift to the big question, prices. Everyone wants to know what's happening with the cost of homes. What's the average sold price looking like now?
Okay, so the current average sold price is $587,432.
$587,432. How does that compare to the peak we saw a couple years ago?
It's down quite a bit from the peak. The peak average price was back in May 2022 at $681,939.
Okay.
So today's average is down 13.86% from that peak. That's a drop of nearly $95,000.
$95,000 off the average price. That's significant.
It is.
And what about the median price? That often gives a better sense of the typical home.
Right. The median sold price currently sits at $442,500.
$442,500, and the correction there.
It's actually even sharper for the median. The peak median was also in May 2022 at $550,000.
So the drop.
It's a 19.55% decline from the peak. That's about $108,000 lower than the median price at the market top.
Wow, over $100,000 off the median peak price. That's substantial.
It really is. And, if you factor in inflation over the past few years.
Good point. In real dollar terms.
In real terms, considering inflation, today's median price is actually 14.08% below where it was 3 years ago. So purchasing power has effectively increased for buyers compared to then.
That really puts the correction into perspective. It's not just numbers on a page. It affects real value.
Absolutely. And it's not hitting all parts of the market equally either.
How so? What are you seeing in the segmented data?
Well, it looks like affordability challenges are really hitting the entry-level and mid-market homes the hardest.
Okay.
Properties in the bottom 25th percentile, price-wise, have seen year-over-year price declines of about 5.5% for the price itself and 4.6% on a price per square foot basis.
All right, so the lower end is seeing noticeable drops. What about the higher end?
That's where it gets interesting. Homes in the top 25th percentile, they've seen minimal price declines. We're talking just 0.16% drop in price year over year and 0.41% drop per square foot.
Almost flat, basically.
Pretty much. It suggests that higher income buyers are probably less sensitive to the interest rate hikes and maybe the broader economic jitters. That top tier seems much more resilient.
And that resilience or lack thereof, it varies geographically too, right? It's not the same story everywhere in the Austin area.
Not at all. It's quite patchy. Across the whole area, we saw 13 cities that actually had median sold price appreciation year over year.
Oh, interesting. So some areas are still going up.
A few are, yes, but 17 cities were down.
Okay, so more down than up. Any specific examples that stand out?
Sure. Like Driftwood saw a really strong appreciation, plus 21.1% year over year.
Wow.
But then you look somewhere like Burnet, and it saw a significant drop, down 19.2%.
Big swings. It really underlines the need for local knowledge, doesn't it? You can't just paint the whole Austin area with one brush.
Absolutely not. It's very localized right now.
Okay, so we have record inventory, hesitant buyers, falling prices, especially in certain segments. This all points towards a market correction. The big question is, how long might this last? What are the broader health indicators telling us?
Well, we look at things like the Market Health Index, the MHI. It tries to give a sort of holistic view of market balance.
Right.
It's currently at 17.80%.
Yeah.
Now, balanced market is typically considered to be around 30%. The historical average is actually 30.91%.
So 17.8% is quite low.
It's well below that balance point. And then there's the Inventory Stress Index, ISI. That's sitting at 5.21%.
And what does that signify?
Anything below 10% is considered low stress for buyers, meaning it heavily favors them. The historical average is 12.57%.
Okay.
So both of these indices are basically screaming that there's way more supply than demand right now. The buyer's market conditions seem pretty deeply rooted at the moment.
And what about actual sales? Are people still closing deals?
They are, but the volume is down. Total cumulative sales from January to July were 17,394. That's down 7.4% from the same period last year.
Okay.
And if you look at it relative to population, sales per 100,000 people are down 9.6% year over year, and actually 22.6% below the historical norm.
22% below normal.
Yeah. And even looking at sales per 1,000 realtors are down 3.3% year over year and 26.4% below the long-term average.
So fewer transactions overall, fewer deals per agent. The whole pace has just slowed down.
Exactly. Transactional activity is just struggling to keep up with all that inventory we talked about. It means fewer opportunities for agents, smaller overall volume.
Which leads us to the projection, and this one is pretty sobering. If Austin real estate gets back to its average long-term appreciation rate, how long might it take to recover those peak prices?
Right. So the 25-year average annual appreciation rate for Austin is about 4.91%.
Okay.
Assuming the market resumes that pace, starting from today's median price, it would take approximately 57 months.
57 months, that's almost 5 years.
Yeah, it pushes the recovery of the previous peak median price, that 548,852 number, out to around March 2030.
March 2030. Wow. That's a long time. It really feels like a significant market reset, not just a short dip.
It absolutely does. It signals an extended recovery timeline.
So what's the bottom line then for buyers and sellers navigating this market over the next few years?
Well, until these fundamental conditions, high inventory, lower demand, shift significantly, buyers really do hold the cards. They have significant negotiating leverage. And sellers, well, they're going to continue to face challenges with pricing and just getting their homes noticed and sold.
So for buyers, it means maybe more room for negotiation, using contingencies, getting concessions.
Exactly. If you're a buyer, you can be more strategic. You can negotiate on price. You can make sure your inspection contingency is strong. You might be able to get the seller to cover some closing costs. It's a market where patience and smart negotiation can really pay off.
A very different world from just a couple of years ago.
Night and day, really.
Okay, so wrapping this up, our deep dive into the Austin housing market as of early July 2025 shows a market clearly in a correction. We've got near record inventory, notably weaker buyer demand, significant price drops from the peak, and all signs point to potentially quite a long road to recovery.
That's the essence of it. A buyer's market with a lengthy adjustment period ahead.
So here's a final thought to leave you with. If the projections hold, and it might take until 2030 for median prices just to get back to where they were in 2022, how might that extended recovery period shape things beyond just individual buying or selling decisions? Think about long-term investment strategies in Austin, or even how the city plans for development. It could have some really far-reaching implications, something to definitely keep an eye on.